All right, so this is for our intraday traders. Um, Basically, so this is 8 a.m. So we get into US session, we're opening, we're closing, and we just wait until we get a reaction at one of these zones here. And we see here that we get a rejection at this buy line here. And if you'd like, you can always set an alert on this thing. So let's do this watch. I'll show you how. So we're going to select price, crossing right here, and then buy line or sell line on bar close, or when it happens, or once per bar, or however you want to do it. So you can get an alert when it crosses here, and um come over and look at what's going on. And if we notice right here, we get an order block created right there. So this is a valid buy, um and your stop loss is going underneath the order block, and then we're looking for a high to take profit at. So that is a very easy 200 ticks. And if you go to the previous day, um, right here, we're at 9:30. We drop down. You could take these shorts if you wanted, or me, I like to uh, trade the RTSs, which is the return to supply. So we get a supply zone up here. Um, that started at 10 o'clock. And then we got our reversal pattern here. And if you want, I'll show you how to use this to find the exact pinpoint of the reversal. So when you get a an impulse move like this that breaks the high over here, we're going to go over here and we're going to draw these zones right here, right? And then we're going to wait for price to react to one of them. And here's one here. We probably would get stopped out of break even or however you trade. And then here's one right here. And I'm going to turn that one back off so we're not jumbling up the screen. And we would take this trade here and stop loss wherever, however you want to do it. And then we target our supply. So there's our intraday traders right there. That's 371 ticks. That's not a bad trade either. So the next day before that, we come and well, we don't have much going on this day for whatever reason. Um, so 8 comes along and we stay bullish. We're above it and we bounce off this zone here, which is the US zone. It's not a high or low range. Um, it's not a supply or demand. It's the I call it the bank zone or the US open zone or whatever you want to call it. But you can see that there's a bounce here, and then you could use this as a take profit right here. But we do later in the day come down into buy line and crash through it, and then we get into this range that you could scalp or trade from here to here. And then uh, the next day, previous day, starts right here, and we just crash. So we're bouncing off the line, and just to show you that this thing was here before that ever got there. There you go. Um, and there's you a trade right there. So um, you're off the sell line, and it's crashing down. It reacted off to 50%, and it just keeps crashing. And then we would just look lefts down here somewhere for take profit on a little bit higher time frame. But that's how you can intraday with this thing. And what's really cool is that the you can see I have two of them on here to get my baseline here, and then you can put another one on and go to scalp mode, change whatever time frame you want. You could put it on a 45-minute time frame. It's not really scalping at that point, but you could do it. And then to catch these reversals, um, is the same concept as you wait for price to break the high, which this is the start of a. So this is the beginning of a 45-minute candle, and this is the end of a 45-minute candle right here, and we broke our high and it came down rejected on the green. So then we would get in on the rejection of the green byline. These zones are extremely powerful, so it's worth the risk. And then we would find a target with which you could just trade at the green line or to this previous high here, or however you want to do it, um, and that ends up winning again there. So there's a bunch of ways to use the indicator. One really the way I have found that I like to use it is for the range breaks for US Open. And if you see right here, here is a, where is it? Do I have a replay on? Nope. Okay, so here's a range break of the US Open right here. So we get a bust. We get a 930 candle rejected off of this zone here. So you could come over here to this. Which one do we got? Okay, need to rename them and put on 930 zone. And then you would see your bullish and you could take it off of this zone here. Or you could go to the day open, which is what we already have down there. And then once you get to 10, you would change that over to 10. And then you would look for the break of the range. And here's the break of the range right here. And I did take this trade, and that was it. My stop loss is the candle I enter on, and my take profit is right here. Once I saw the rejection, I did not take profit there. Once I saw the rejection of it, put my stop loss on the top of this wick right here and let it get hit. And then you could have traded the rebound all the way back up to this high here. But those are insane risk to rewards. I know it sounds crazy, but that is what it is. I did not have any drawdown on this trade, and it doesn't even register it because I don't know why is it not registering what's the reward. Crazy, but it's through the roof, and that's how you can use the indicator